In this video, I'm going to be showing you one of the best price action strategies out there in the internet. And this is based off of market manipulation. I'm going to be explaining how the market is manipulated based off of price action, how you can better understand what is actually going on, because the usual technical analysis taught online doesn't work. It does not work. And if everyone uses the same information, if everyone obtains and uses the same information, and 95% statistically lose or blow their accounts, then that means something is wrong. It's either something is wrong with the 95% of the people, or something is wrong with 95% of the information being released out there on the internet for free. Now, once you understand price action based off of how these market makers, banks, hedge funds manipulate the markets, then it's game over. You can clearly see what is actually happening, because once you see it, you can't unsee it. Right. So I'm going to be showing you a couple of trades that I took based off of this price action manipulation, and I'm going to be showing you a couple of examples of this manipulation at work. Right. So let's get into it. We're going to be looking at this pair card CHF. There was a trade I took here on Friday last week, and I'm going to be explaining how I took this trade, why I took the trade, the manipulation that is based off of taking this trade. So let's go to the 15 minutes. If you look at the 15-minute charts, this is exactly where I sold, right here. My stop loss was above here, and my take profit was about down here, like 1 to 2 or so. All right, so why did I take this trade? There are a couple of reasons why I took this trade, a couple of factors that helped to influence my decision in taking this trade. And one of them is this high here. This is the previous day's high. Now, if you're new to the channel, if you're new to my videos, you see these vertical lines here. This indicates the start of one day and the end of that day, and the start of a new day. So this whole day, this whole section is one day, and the next section is another day. All right, so this was Thursday and this was Friday, just to put that out there. Now, why did I take this trade? Well, there are a couple of factors. If you go over to the 1 hour chart, what you'll see there is, if you look at this chart right now, you'll notice that there's a high all the way up here, right? That the market formed this high and then came down aggressively, right? And then spent some time consolidating, moving sideways all in here, right? And didn't go back to this high, right? So if you look at this, and if you look at the dates here, this is 8th of July, as you can see down here, 8th of July. So that means this is the high of, sorry, 8th of June, not July, sorry. That means this is the high of June, right? This is the highest points of June. So let's say high of the month. So this is the high of the month, right? This is the highest points that price has reached in the month of June. Now, to understand manipulation, how market makers move the market, you have to understand that the market makers, banks, big banks, hedge funds, whatever you want to call them, smart money, they trade off of the highs and lows of the day, highs and lows of the week, highs and lows of the previous week, highs and lows of the month, highs and lows of the year, all-time highs, all-time lows. That is how they move the market. And every single day you have a high of the day and low of the day. Every single week you have a high of the week, low of the week. Same thing goes for the years and the months and all of that, right? So market makers work off the highs and lows. Why? Because there's high liquidity at the highs and the lows. That's where majority of the liquidity is located. And when I say liquidity, I mean stop losses. Buy stop losses, sell stops, buy stops. And then what happens is the market goes back to that area to stop hunt those orders, to stop hunt those buy stops, sell stops, and stop losses. Basically taking out the money, grabbing the money in that price point, and then going away from that area quickly. So now, why did I take this trade? This was the high of the month, and the market went back to that high of the month, as you can see here. And you can see how, notice the way they formed this high of the month with this hammer. You see this inverted hammer, this pin right here. This is a sign that there's a lot of liquidity all the way up here. All right, this week that is left here. So when the market goes back to that week, we can expect a reversal. Now, if you look at this chart, you can see that I drew this box from the body of the wick of the candle all the way up to the tip of the wick, right, to the top of the wick, right there. If you extend this box, you notice that anytime the market goes back to that box, the market tends to reverse. And a good example is here. You can see the market taps that box and comes back down. Doesn't really reach the exact high, but taps the box and reverses all the way down. And then the market goes back up there to that high and taps the box one more time or two more times, right? So when I looked at this on the charts, I saw that the market had gone back to this high of the month, and we know that there's high liquidity at the high of the month. So what I was waiting for is a stop hunt to occur at the high of the month. Now, if you go to the 15 minutes, you'll see that the market reaches that box and goes back down and begins to consolidate. And we know that this is Asian session, and the Asian session lasts for about 8 hours, right? And we know that after the Asian session, we expect a breakout in a false direction so that we can trade against the masses. Now, after this consolidation that happens in here, there are people that trade this strategy called the London breakout. And during London session, they take the breakout outside the box, outside the Asian range. So, for example, what they do is during the Asian session, they draw out this box and the market consolidates inside that box. And when the market breaks out during London session, if it breaks to the upside, they take the breakout to the upside. And if it breaks to the downside, they take the breakout to the downside. So now that's a very popular strategy. So what we basically do here is when the market does that and breaks to the upside, we know that that is a false move. That is an induction. That is them trying to deceive and induce people to take a position in one direction so that they can go in the opposite direction. Because if you understand how market makers work, how they move the market, if you understand forex, foreign exchange, you know that in order for a buyer to be there in the market, there has to be a seller. In order for a seller to be existent, there has to be a buyer. So you have to have buyers and sellers in the market, right? You can't have only just sellers. So what the market makers usually do is in order for them to sell, they have to make people buy. So they sell to the retail traders that buy this uptrend, that buy these breakouts. So people buy the breakouts all the way up in here. And if you notice something, if you go back to the 1 hour chart and you basically draw a horizontal line, let's remove this box for now. If you draw a horizontal line at the exact high of the month, you notice that on the 1 hour chart, let me remove this. On the 1 hour chart, what do you see here? You see that this candle that breaks out of this box on the 1 hour chart, you see that the candle goes all the way up in here and comes back down and closes below the high of the month. Remember, this line signifies the high of the month. Now, why did they go all the way up in here and then come back down and close below the high? Why? Because they went to take out the liquidity that is located at the high of the month here, all the way in here. They went to take that out. Now, people who trade the 1 hour chart won't take the breakout out of this high of the month. But if you look at the 15 minutes, which is one of the most popular time frames that people trade, if you look at the 15 minutes, you see that the market breaks out of that high of the month. And once the market breaks out of that high of the month, what happens? People take buys here. Breakout traders buy in here at the close of the candle. Remember, they tell you to wait for the close of the candle. As the candle closes here, people take their buys. People put their stop losses all the way down in here, right? And also, not only that, people also trade the London breakout. So there are people buying all the way in here. Everyone is buying. The majority of people are buying all the way in here. At the same time, not only that, what they tell you about market structure: higher highs and higher lows, higher highs and higher lows, right? So we know higher highs, higher lows, higher highs, higher lows. You expect another higher high, right? So what people basically do is you see this high, low, higher, higher low, and then they expect another higher high. So a majority of the people that look at this, they're also looking at this uptrend all the way in here, right? You're looking at this uptrend. So what the majority of people are seeing is buys. And we know that once the masses see buys, once everyone is seeing buys, does know the market is going to reverse, because market makers want everyone to buy so that they can sell. Because if people don't buy, they can't sell, right? Because they sell to you, they take the opposite sides of your trades. That's why you have instant fills. That's why when you click the buy button, it automatically puts you in the market, because automatically it automatically registers on the market makers books that if you buy on their book, it will show sell for them, right? So if you sell, it show buy for them, right? So they take the opposite of our trade. So as majority of people are buying this uptrend, buying all the way in here, all I had to do was wait for another 15 minutes or 30 minutes. So for the market to come back in, and you see the next candle comes back in down here. Why did the candle come back in here? Because they trapped a lot of people all the way up in here, right? So I basically took my sell position here, put my stop loss above the high a little bit, and then went targeted these lows for a 122, 122.5 risk to reward. And if you look at this very well, you can see this is an M formation. If you look at the RSI, you can see, let me see. If you go on the 1 hour chart, on the RSI, what you see is this is the high of the month here. Let me just draw this. See that this is the high of the month, and you can see price shows us higher highs. This is the high, and this is a higher high, higher than this previous high. But on the RSI, it shows us divergence. So this high is lower than this high. So that shows us that something is wrong in here, right? So I'm going to be showing you another example. I think a very beautiful example is on Bitcoin. But before that, you have to take note of something. Anytime the market approaches a high, a very significant high or a very significant low, you should not be looking to take the breakout. So you should be looking to see what's going to happen at that high so that you can take the opposite direction. Now, a very good example of this market manipulation that happened on a large scale is on Bitcoin. If you go to Bitcoin, let's go BTC, BTC USD, let's use Binance. So I'm gonna just clear this. If you go to Bitcoin on the monthly charts, you'll notice something very, very beautiful. No, on the weekly chart would be better. So on Bitcoin, if you look at this, we know that Bitcoin had a very huge bull run from 2020 all the way to like 2021 or 2022, right? So what made Bitcoin to crash all the way back down from its highest high at 69,000 to 15,000? Now, if you look at this, this is simple market manipulation at its best. Now, we see that the market on Bitcoin rose all the way up to about, let's see what price point is this, to about 65,000. 65, let's round it up to 65,000, right? $65,000, that's the price, this highest high. And then all of a sudden, the market comes back down and spends about how many days is this? 182 days below this highest point. And then the market goes back to that highest point. So they call this all-time highs. This is the highest point on Bitcoin, the highest possible point on Bitcoin. Now, if you look at this, at the time Bitcoin went back up here to these all-time highs and broke the all-time high, everyone was saying Bitcoin to the moon, Bitcoin to 100K, Bitcoin on all the news outlets, all the news channels, all the newspapers, everything on social media. Everyone was saying Bitcoin buys, Bitcoin buys, buy Bitcoin. Bitcoin is going all the way up to 100,000, right? So everyone is buying this. Remember, the market has been going up and then goes and forms the all-time high, comes back down, goes back to form that all-time, came back to that all-time high, right? And then closed above the all-time high. And also, if you notice, this is a week and this is the weekly time frame, right? This is a shadow here and this is a weekly time frame. So on the lower time frames, Bitcoin closed even higher than the all-time high. Now, everyone is seeing this. Everyone is seeing buys. But what actually happened is sells. So as everyone is buying, market makers are selling, right? So that's why you see the market crashed. And then they tell you that Bitcoin crashed. Oh, we didn't know what happened, this and that. But the market makers knew what they were doing. So if you go over to the daily charts, you see something very, very, very interesting on the daily charts. So now we're on the daily charts, and if you look at the daily charts, you can still see that all-time high. I see the market goes back to that all-time high, it breaks it a little bit, comes back down, and then breaks it aggressively with this big fat candle. And once the market breaks it with that big fat candle, what happens? They reverse, right? And also giving us this M formation. And if you look at the RSI, you can see that the market is giving us what? The market is giving us higher highs, but the RSI is giving us lower lows, lower highs. So that tells us that the market is about to reverse. That's like a hint, a cheat code right there. So anytime you see that the market approaches an all-time high, or breaks an all-time high, or breaks the high of the day, breaks the high of the week, high of the month, high of the year, all you have to do is wait and see what happens at that high. If the market comes back in like that, that tells you that they just went out, they just went all the way up there to take out liquidity and take out all the stop losses. So this is basically a stop hunt and an inducement, inducing people to take buys. They also use media to manipulate people uh, to also get into the market, and that's something for another video, right? So I'm not going to be going deep into that, but basically this is how they manipulate the market. This is how they manipulate the market. Also, if you look at this all the way down here, before they made this move back up, you will notice they formed this low here, right? They formed this low here, and what's wrong with my voice? Sorry about that. And they formed this low here. They started to consolidate all the way in here, and then we know that after consolidation we expect a breakout, right? And we know that the breakout is usually the false move. So now you can see that after this consolidation here, the market breaks to the downside and does what? It forms a W formation all the way down in here, right? So there are people that who trade break and retest. So some people that who trade break and retest, they will look at this and see something like this and expect the market to continue going down, but that's not what's going to happen. Now, you can see these tiny candles. Why did they form these tiny candles here? These tiny candles are just to waste time, to spend a lot of time below this low, get as much people as they can to take sales back, to be taking sales while so once their book is complete, once they've gotten enough liquidity to make their move up, what they do is they will shift out of that area with speed. It's usually one or two candles they'll use to shift completely out of that area. So all the people that took sales in here instantly are put in huge drawdown, right? So once they trap you, they shift out of that area with speed. If you notice, once they trap you here, they move out of that area with speed. So that's basically how they trap people.